worry is, at least for the next 2 months, we're not going to see the end of this feeling of misery in terms of inflation. It's going to keep looking like it's going to get worse, but uh, at the same time, the U.S. economy is preparing itself to go into a recession. So they've had one negative quarter of GDP growth. They might have another which will qualify as a recession. So there will be some fear of that also coming in and hitting some things. In the universe of the listed stocks, we've seen a massive correction in tech stocks, both abroad and in India. We've seen a fairly big correction in even non-tech, whether it is IT services or pharma or the chemical players, and nowadays even the steel and the commodity plays. Sharp and steep corrections. So, is it best to sell in May and go away? I don't know the answer to the question. The correct answer, of course, is I'll tell you in August, which is obviously not very helpful, but it's probably the best answer. But apart from that, I want to just ask people what they're thinking, and meanwhile, let me just tell you what I am thinking. Please raise and request as you guys feel free to talk about. When you can come on stage and talk. Two things: don't ask about specific stocks, and basically, don't say I told you so, because there have been too many people who've said this market will fall since 1998, and eventually the market has fallen 10%, and people cannot take credit for such stuff. It does not matter that somebody predicted it and I told you so and all is very boring. So let's look at, should you sell in May and go away? Remember, this is random space. This is not like any financial advice or something like that. It's just to get an idea of what everybody's thinking. Macroeconomics, there are bad things, there are good things. India has bad things and good things. We have stopped wheat exports. We've done a bunch of things. So please feel free, raise your hand. I'll tell you while I tell you what I'm thinking. We'll add you in as a speaker. So first things first, my feeling on this whole thing is that India is going to see probably slightly lower numbers of inflation in June. That's coming on June 12th. That's the main number for inflation. And in June, it may be a slighter bit less in comparison. There is potentially one of the reasons for this is the blockage of wheat exports. It's a very temporary phenomenon because India actually doesn't have a low amount of wheat. It just produces maybe 2x or 3x of what it needs. But in general, the government procures the surplus. Instead of procuring the surplus, the government could simply have allowed it to be exported. But, the PMO is somehow divorced from the Agri Ministry, and therefore the PMO took the action of banning wheat exports, just as the Agri Ministry had sent delegations to other countries saying, we will export wheat to you, talk to us. So this is a little bit of a nonsensical situation, but it's happened because I think of mass outrage and, hue and cry, random. It just hurts farmers more than anything else because they would have got like 1 rupee extra per kg of wheat. But okay, let's just leave that there. However, inflation is going to remain in the West because there they have a bigger problem. One of the reasons, and I've been talking about earlier, is that they have printed money to give to people, which means people will get that money and they will spend it, and they've done this for the last 2 years. That will obviously cause a spike in inflation. There's another reason why wages have gone up in general, because people have been supported by the governments, generally, giving away free money. To that extent, that money stopped in September last year. It's only now starting to occur to people that this money has stopped and therefore they're not going to get more, though some states have continued to keep the flow of easy money going even now. So given that, I think that extra money that's been given in the hands of people will cause a layer of inflation. There's another inflationary element right now, which is that the government is printing money. Not printing actually, but the US government is actually borrowing money, which the Fed is buying for the most part. The Fed is lending them money to fund things like Ukraine's battle against Russia. This is also free money to defense contractors who essentially, basically, the US says it's funding Ukraine, but it actually gives the money to the defense contractors, takes weapons and sends them over to, Ukraine. So essentially, this is also printing of money that is going in the hands of certain people. If those people start spending that money, that will be more inflationary in nature, especially in the West. India has no such equivalent, so we don't have that much of a problem. However, we will take cues from the Western world because that's where most of the investments come from. So it is going to be a rough season. I don't know whether May is the bottom or whether the bottom will come later this year. My thing is, there is potential good news that can come in. One of the potential good news is that if the war in Ukraine stops, the second of it is if inflation is arrested at some point. Like I said, India, it will be marginally lower next month, but um, the US might still take a few months for it to get back to normal. I don't know if that happens. These two pieces of good news might actually bring the market back. Um, while I say that, I'm going to stop here. And if anyone wants to speak, please go ahead. Okay, request. We have
Yeah.
Sanjeev.
Deepak, I have a question. So, because I'm
Ah,
the co host and I could unmute anytime, so I'll ask the first question. We are down around 13 to 15% from the previous top in Nifty. Still, why does this 15% correction seem like feel like very big one? Is it because we have been habituated in the past 2 years in seeing the market go green and up all the time, or is it because we are fearing that the worst is yet to come?
this is interesting because I think the last time we saw this, Nihit, was in 2018 when the headline index didn't fall quite much. Okay, so you saw the larger cap stocks didn't fall quite as much, but the mid and small caps got battered. So you could see that, although there was a crisis at that time, there was, the introduction of long-term capital gains tax that brought down the mid caps in February, and then later in August, September, there was the ILFS slash general NBFC crisis, which hurt a lot of companies. I think Piramal Enterprises was at 2,500 at that time, and now also it's still 20% below that. It's been 4 years, nearly 3.5 years. So there was a panic selling, and that was possibly more restricted to India at the time, not the world. So we did feel that a lot of damage was happening in the market, while the headline index didn't seem to show that much of it. Today is also one of those times, but you're seeing damage across the world. So, for instance, the Nasdaq is on much more than India is. Our headline indexes are probably keeping themselves up because of relatively higher weightages to certain stocks which haven't fallen. So, whether it was a TCS or whether it was even the HDFC and HDFC banks have fallen quite a bit. I think it's the non-financials, the commodity stocks that have kind of kept the index up. So it feels more because I think a lot of stocks have fallen much more than the index. So we feel the pressure a lot more. But at the same time, a lot of smaller stocks have simply, a lot of people have simply not experienced a deep fall after uh, COVID. And COVID was a relatively temporary fall. So this has been now 6 months from the peak, more than 6 months. The seventh month from the peak now, or eighth month from the peak. The peak was for the Nifty was in October of last year. For small caps, it was probably January. So we still have, it's been 3 or 4 months. Or if a person has just started investing during COVID, he's like, 4 mahina to ho gaya, kidhar hai recovery? So, people get used to whatever they see at one time. And the guy who thinks he's got 2 years of experience in the markets has only 2 years of experience in the markets. Therefore, for him, it's like, a minority of one, in a way. So, which means there's been just one data point in which is. So, I think that is one of the reasons why we're feeling this pressure. And the problem really isn't that the fact that the market has fallen. The problem is the fear that the market will fall a lot more. In COVID, it fell a lot. And for about 15 or 20 days, we thought the market will not recover at all. And then it recovered, much to uh, people's surprise that it recovered so fast. How can, when the whole economy is shut down, lockdown, ye wo, market is going up, Reliance is raising hundreds and thousands of crores. How and why? The answer, uh, there are no such equivalents today. There's no big positive stuff happening in any meaningful way. It just seems to be just negative and less negative stuff. So I think these are all, reasons why the feel is just like more of despair, and maybe I don't know, and that's what I want to gauge: is there despair, is there not?
Great, awesome. So we could open it up for others to ask now.
Cool. We have Sanjeev. Do you want to take the stage? Okay, if Sanjeev is not coming on, we have Kabir. Why don't you go first, and then if Sanjeev can join after that.
Sure. Hi, Deepak. So, a quick query. Do you think in the US, if interest rates on the upcycle and with positive yields on the dollar, it's only going to, consistently put pressure for emerging markets and FII selling? Till when will the retail be able to, cover up for that? And I think many months one has covered up for it. But going forward, if we aren't, do you think that could create even more of a pressure on the markets?
So interestingly, the last 3 years we've seen a lot of retail participation. Even now, it continues to be above 35 or 36% in the equity cash markets. Seems to be traded by retail. Which, when I say retail, I mean retail plus HNI, because it's retail versus brokers versus institutions domestic versus institutions foreign. So if you look at those four kind of players, retail slash HNI tend to be, more than one third of the market. Uh, it's not so earlier it used to be that the FIs had very deep pockets, but you saw that consistent selling that we've seen for the last 6 to 8 months has not really created a major dent. It's only 10% in the Nifty. The last 1 month has been that, and usually you find that typically when there's a large IPO, there's a dip. That's because so much money gets sucked out that during that time when money's been sucked out, people don't have the money to be able to buy when the market's falling. So it tends to happen that way. But this time, you see, LIC was not such a big IPO in the sense. It was big for a few things in the sense. It was not like a 200,000 crore or 300,000 crore kind of IPO. There was not much leveraged IPO financing. Even the IPOs that came after it haven't been so liquidity threatening. The US rates in general have been, I think, on the minds of people in the US. One thing that's happening is not so much the rates. I think it's also the news that the Fed will stop buying US government bonds. And not just stop buying them, they've already stopped buying them, but they will actually cut down what they will continue to buy. Which means what happens with the Fed is, imagine if RBI did this, the whole world would kick up a fuss. Okay, so the RBI doesn't really go around doing this stuff that the US does. What the US does is that the Fed prints money to buy US government bonds every month. Even now, there's the funda that happens. What happens is when the US bonds that it holds, they mature or they pay an interest. That money comes to the Fed, and the Fed then reinvests that money back into government securities back again, saying, "Oh, we're not buying more, but whatever we have will continue. If they mature or they give me interest, then I will take that money and put it back into government bonds." This is the order of 70 to 80 billion dollars per month, because the balance sheet size is so large. So now when there's a 70 billion dollar maturity, they won't put all of it back. They'll put only some 40 billion back. So this 30 billion, that's they're not buying. In a few months, that will come down to zero. That means they will not reinvest anything of what they get. So they will naturally try to trim down the balance sheet. They're not selling, they're just not buying more. Okay. And that is enough to trigger a lot of fear in the markets, because the US has printed so much money. The Fed has printed so much money to buy US government bonds. Imagine 70 to 80 billion dollars. So to give you a rough idea, they issue, I think, about 105 to 110 billion dollars of bonds per month. I think that's the last number I checked. Of which 70 billion was coming from the Fed. So 70%. Imagine if the Indian government was borrowing 100 rupees every month and 70 rupees was provided by the RBI. It is simply unimaginable, because they would have laughed us off the planet. But since the US is doing it and has been doing it, somehow we normalized everything. But what the US is doing now is the Fed is saying will stop. So how do you get, if the rest of the world was only able to buy $20 billion out of this issuance of 105, the Fed was responsible for the rest, maybe 30. So what happens when the Fed stops buying? The rest of the world and private players have to start buying US government bonds. When people find the US government bond yields attractive, they might say, listen, whatever excess money we have, we'll put into US government bonds because they're the safest. That safety, run to safety, could also be triggered by the fact that people will take money out of other assets to put into US government bonds, thinking their yields are better. This could cause run out of A, emerging, and B, developed markets as well, including hedge funds, startups, crypto, everything. So the riskiest assets first, because the riskiest assets, once they start losing money, people run to safety. Run to safety is government bonds. Today, perhaps that's happened in the crypto world. The next run to safety could happen from the emerging market world. We don't know. So I think there is that fear that it will happen, but if it does, it's probably irrational and more panicky in nature, which is a good thing. You want irrational, sharp down moves, because that is when you get to buy. When people have to sell in a panic and then go for something else, they'll usually come back fairly fast. So when I say fairly fast in the macroeconomic world, it'll be like maybe 6 months to a year. If people sell for fundamental reasons, saying India is a shit country, we don't want to come to you at all, you guys are waste fellows, you will not even sell wheat to other people, then you have a problem. But if it's not that, if it's this panic thing, then it's fine, I think. You just have to live with the pain, but things will come back. I don't know which the answer is, but I think the answer to your question is perhaps yes, there will be a panic at some point. That point may be a little bit further down, because the Fed is doing this very slowly. But when it happens, I feel it will be more of a panicky run rather than something more, organized.
No, that's a very helpful answer. I think I've just been tracking the mortgage rates also. India, you can get housing finance at less than 8, around 7%. And over there on a fixed, it's around 5, which I was shocked to just see the difference so less. So I was thinking yields are definitely going up there. That's why the question, but no, happy to hear. It was great to hear your thoughts.
Thanks. Thanks. I don't know about the mortgage, but of course, mortgage yields should go up there. The housing prices there are insane. You pay like crazy. Of course, it's like Bombay, but still, I don't think India's mortgage rates are not sustainable. One of the reasons why India mortgage rates are so low is because of the extremely low capital requirements for mortgages. They're the cheapest loans because the RBI gives a very special dispensation to banks that finance housing loans compared to them financing anything else. Like for instance, a personal loan, the bank has to put much more capital against it. A loan to a business, it depends on the credit rating of the business and the quality of the business and so on. But for a home, they don't have to put more than 50%. That means if for a personal loan of 1 crore rupees, I have to put I'm just saying the numbers, but 1 crore rupees, let's say the bank had to put 10 lakh rupees as capital from their own side, lend the 1 crore, but they have to allocate 10 lakhs from their side. They'll only have to allocate 5 lakhs if that 1 crore were given as a housing loan instead. So it's one of the reasons why housing loan rates are relatively low and such a competitive market. It's the same in the US, in a sense, it's not as crazy, but I think they do have lower capital requirements of housing loans. But I mean, the US system has evolved from based on also how much the home mortgages sell for. So what happens is home mortgage-based securities are created out of mortgages. They are sold in the market. So, for instance, if I take a pool of 1,000 mortgages, I don't have to keep them on my balance sheet as a bank. I can package them into a mortgage-based security pool, MBS pool, it's called. You put that into an MBS pool, and then you sell the. Think of it as like I've created a company and I've sold the shares of that company. I put all the mortgages into a pool. I sell securities of that, MBS pool, and one of the biggest buyers there was the Fed. Fed was buying residential mortgage-based securities to a very high extent. It's no longer the big buyer there. So when you lose a big buyer, the prices of the mortgage securities will come down because demand is lower, supply continues. So what happens then is when the prices fall, the effective yield that I get on the mortgage is lower. So what happens then is I increase the rate of interest that I charge on the mortgages, on new mortgages, so that I can recover a better rate when I sell it. So for instance, if I had loans which were at 3.5%, and now there's not so many buyers for the mortgage security, I will then create the next set of loans where I lend at 5% and then create an MBS out of that, because there at least I can get better rates, so when I sell them. So it's not really balance sheet driven there versus in India, because India, the MBS market is almost non-existent, very little there. So here, that's one of the reasons why the differential in the US is more market driven, so they will be faster. Today in India, we have players who are borrowing at 9.5% and giving home loans at 6.5%. I have no idea how that works. They're private players, but, startup type players, but, it's the strangest thing in the world. So, cool. I shall wait for more people to stand up. Something happens to my Twitter spaces. So, Nihit, if you see people, when you just add them on, because I think I somehow get messages after the space saying, "Yeah, I want to speak." And I'm like, I didn't even see you. So if you get any messages for requests, please add them on.
Yep, I'll take care. So in the meanwhile, I have a very off-topic question somebody sent on Twitter. I'll just shoot it, and you could take it if you think it's worth. So the guy is asking, what's your thought on the barrage of things coming out regarding front running from all these AMCs? So maybe we could not talk about specific cases, but something about what front running is and how it affects an investor. It's completely off topic, but in the news.
Yeah, pretty interesting. While we wait for requests, one of the things that I do feel, that I think as an industry, we should address is this concept of front running. It's been there for the longest time. The concept of front running is simple. Let's say I call you up and say, Nihit bhai, buy me, I don't know, 1 lakh shares of Reliance. Okay. You say, boss, ये 1 lakh share खरीदेगा तो price तो ऊपर जाएगा. So he says, Deepak bhai, fine, but then you put 10,000 shares of your own order first. कि पहले मैं खरीदेगा, then we'll put Deepak's order, and Deepak's order will move the market up, and then we can sell. You sell your 10,000, you can make a profit. So this is front running. Now the word front running should be illegal front running. Illegal front running is only when you have access to non-public information. If I went around and put a newspaper ad saying, I am going to buy 100,000 shares of Reliance today, or 10 lakh shares of Reliance today, and then you or anybody else went and bought 10,000 shares before I could buy it, then that is not front running, because the news is not private, it is public. So if people react to public news and even of somebody who has to sell, that is perfectly fair. It is private news that is a problem, right? So the fund world has some private information. So for instance, if I were to say that there is a mutual fund that has just got a very massive inflow for whatever reason, that mutual fund has to go buy certain shares because they have decided they want to buy certain shares. And who is privy to this information? It's probably a private crowd. It'll be the fund management committee or the fund manager, the dealer, and the actual trader, and so on. A relatively small number of people. It's very easy for them to be able to say, listen, we're going to buy the small cap and we're going to put 50 crores in this small cap. एक दिन में तो नहीं होगा, 10 दिन लगेगा. So अपन खरीद लेते हैं अपने लिए in our relatives account, and then this will go up, and when the news comes out this mutual fund is buying, more people will go buy, and then the stock will shoot up, and then we can sell. This is illegal front running because using non-public information to make these decisions, and SEBI does not obviously like such things, but more importantly, nobody likes such things. In the sense, earlier it used to be very common. It was almost acceptable कि यार of course अंदर ही खबर है ना, so that funda was considered good thing. There was खबर नहीं है तो why are you even talking to me about buying shares? So all brokers used to say I have khabar, I know this fellow, he goes to golf with that fellow, and they would be like all of it was insider trading, front running information that they would say that they'll say we know who is buying and who's selling, and using that information we can front run um, uh, other people. So this is now obviously considered not acts in good faith in that context. So therefore, I uh, I think the issue now is that we have some mutual funds where this trust has kind of been broken. When I say trust, I mean the issues around uh, mutual funds, certain dealers or certain people benefiting from front running. We don't have any evidence yet. It's just rumors and some whistleblower letter and so on. But I feel a this is distasteful, and b we need a better way to address these situations. At Capital Mine itself, we have changed our process completely to run. So it's run by an algorithm. So buying and selling is run by an algorithm which is controlled, so that there are no sudden bursts of buying or bursts of selling that happen. Sometimes even it's genuine. You see volume. A trader will want to buy when there's volume, but we said okay, instead of that, codify it so that nobody is taking any decision saying abhi zyada kharidega, abhi kam kharidega. That way it kind of reduces the chances of this being front run, and to keep the information secure so that as few as people possible will know it. Of course, we are not even big enough to move even a small cap, but the idea is to generate that kind of confidence that even at larger sums you will be able to do this without that fear. I think the industry itself should come together and start building up these best practices, and in general there should be enough evidence to deny or accept any of these allegations. I feel that is primary right now because everything is just rumors. So much as I like to say that this is a bad thing, I think the more important thing is how the industry actually reacts to it. If the industry decides there's no big deal, then I think people will lose faith in the industry. If they decide that it is a serious thing, we need to address it, then I think great things can happen. US has sees a lot of very very strong regulatory action, both criminal and civil, against people who are caught front running. So uh, I think India deserves that as well.
Work today. It's probably a US thing where you have holidays in June, July type thing, and therefore you sell in May and go and then come back after the holidays. Then it became a ritual because stocks won't move or go anywhere. Now nobody takes holidays anymore and everybody works on their holidays. So I don't think it matters. In fact, India's holidays are not in May to September type frame or June to September type frame. So, but I think the downside of such things is that you can never predict that whether sell in May and go away will work, because if it's guaranteed not to work, then you should say buy in May. So it can be sell in May into 2022 will work and 2023 it won't work. So we don't know the answer to that. Already it's proving right. If you're sold on the 1st of May, by 16th of May, you're actually quite profitable because you sold on the 1st of May. Um, Having said that, I think, yeah, but Sanjay, if you can hear us, please join up on stage, um, or we'll just keep going on this front. One thing I did want to ask, people is, are you feeling any panic, or are you feeling like this is a fantastic time to buy, or more like, listen, I'm not going to buy now, I'll just wait till the market corrects another uh, maybe, you know, 2 or 5 or 10% more, and then I'll buy. Usually that doesn't happen because if the market falls 10 or 15%, you'll actually be saying you should sell everything because that's how markets are. They create and induce panic on the downside. It doesn't seem like panic to me, but there's a lot of gloom, despair in the market saying, "अरे क्या यार, 6 महीना हो गया, कुछ नहीं हुआ," type thing. But uh, one of the things I've noticed in the US at least is that there is a lot of there's a lot of fear, at least in the tech stocks, saying they won't come back. There's repeated bad news, right? So after all this drama, Netflix goes down some 70%, and then the French government or somebody else, the Swiss government yesterday said, "Boss, if you earn $1 or in Switzerland, then 4 cents, so effectively 4% of that should be taken out and invested in movies that are made in Switzerland or people who have made in, they can be used to buy content that is made in Switzerland and so on. And all the other European countries are kind of thinking of similar things. I'm like, you can do this when they're earning a lot of money. When they're not, this is like basically added pressure, right? So you just beat them up more when they're down. And similarly, Portugal is apparently saying they should tax, you know, uh, they want to tax people who are using crypto. When crypto is down, then 40% क्या tax होगी यार? In the end, it might fall another 40 or 50%. But importantly, I would say be careful of just buying blindly at this stage, just because something is fallen 70% from the top. Because the top could be, a random panic driven top rather than something particularly uh, positive, which means certain tops like the IRCTC went to 6,000. Equivalent of today would be, what is it, 1,200 equivalent of today because it split 5 times. It's now at some 680 or 690 rupees. Now you think of it and say 1,200 to 690, nearly 50%, great company, platform, company, literally. But this is not really a company that should be worth thousand, should have been worth 1,200 at any point in time. And when it went, it could have gone to 1,500 also. There was no reason. It was just going up like crazy. So people who sold at 1,200 must have just been lucky. But even at 1,100, they were lucky. But those people saw it go to 1,200 also. So you feel like a fool if you sell too early. So you let the price go, and then when it retraces a bit, you can sell it. So the top is not really a reflection of what the stock should have been. So therefore, 50% from the top means nothing. So if you thought IRCTC was a good company, maybe the real value was at uh, at 800 or 900, and from there it slowed down only about 15-20%. So not meaningfully bad, but you could easily see any company today fall 40-50%, even though the index down only 15. So I think you should be careful of looking at comparisons of how far from the top have they fallen. Although I will use that a lot because even the Nifty is looked at as how far from the top has it fallen. Uh, so, as much as I use it as conversation pieces, it should not be used to make decisions. And the idea being, would you invest at this time should be based on more uh, either technical factors saying the volumes are coming back, things are getting back in shape from a technical perspective, and we're seeing stock prices go back up, or from a more fundamental or macro perspective, where you'd say the stocks in India are starting to go up because earnings are good. Oh, the audio is low. Okay. I hope this is any better. Uh,
Yeah, this is much better.
okay. Yeah, no, I tried the hands free because I thought that was why this whole thing went back. Okay. So that's good. I hope thank God I'm not recording this because then the audio would be lousy on the recording. Um, cool. I think I just want to keep it short. It could be interesting, but we had only one uh, speaker so far. Maybe this is not the topic everybody cares about. So maybe the answer is no, you shouldn't sell in May and go away. Either that or Twitter Spaces is acting up, and I'm not seeing the hundreds of requests that seem to be coming, um, which I will find out soon enough. I suppose, yeah. Bruce Wayne asks me to be added as speaker. How do I add you as a speaker? Okay, but here you go, and I'm gonna try and oh, I get 7 requests to speak. Okay, there you go. And no, okay, well, okay. I think Sharad Bhai, are you there?
Yes, please.
Ah, sir, Puli sir. How are you, sir?
I'm great. I
Fabulous.
won't be talking up. Yeah, I won't be talking about USA Fed rate. Fine, fine, fine. वो फेड रेट का बात नहीं करेगा, वो उधर टेपरिंग का बात नहीं करेगा, because India is a isolated country. We are not much affected by all the functions over there.
Correct. I think that's a good point. But what do you think about India as a whole, sir?
Yes, India, we will seek March 21 lows in coming weeks or month. This
March
so-called bullishness is unwarranted, unwanted. Everything is bad. Then why the index should be up? My basic question is: Asian Paint is results were pathetic. Then Axis Bank, then State Bank, then whatnot. So how the index should be up, and for what joy? In March or March 21, we were at 12,000. So what has brought in so much of bullishness? And at that point of time, there was the results were good, everything was hunky dory. But now another thing is today the market closed at 240 trillion rupees. The market cap.
I
The
see.
GDP is also 240 trillion estimated. Okay. Now the thumb rule is 50% or 60% of GDP should be the market cap. So if I do the math, so we should be around 11, 12,000. So I'm very confident that it will come. People who are basking for pullback and new high are so stupid. So stupid. They don't know the job. So anybody who's talking about a bull run and all that, it's nonsense. Discard them. And my humble request to everybody, don't buy stocks just because they are cheap. They will get cheaper and cheaper and cheaper. Now, just imagine a blue chip, so-called Wipro, 750. Today it is 470, and 2 months down the line it will be 350. Why will you buy Wipro when Accenture is quoting at 27 PE, world leader, world class company, no corporate governance, is available at 27? Why you will buy Infosys at 31? Or Tech Mahindra, 13% growth and P ratio of 23. Why will you buy? What is so special? And similarly, I can go on and on, on and on. There is no space to buy. I think Bandhan Bank is a good one to bet on, and some of the my favorite small cap MNCs. Besides that, I don't see anything. Our future is bleak. A dollar rupee, if it surpasses 79, it will be 82. Yeah, but having said it will touch 82, then we might stay a bull run because of currency. Then we can see a new high. And on balance of payment, it is gone. Everything is, nothing is working except our imagination and our courage to fight out. I think one should avoid buying. A best thing one can do is wait, wait, wait. But people cannot wait. They want to deploy. So I think we will be seeing a sub 12,000 in coming weeks or months. That's it, Deepak bhai.
Thanks, Sharad bhai. Yeah, always good to see both sides of the equation here. One of the uh, problems that we generally see in the markets is that people are very bullish. But yeah, I think having that view is good. But this one point about companies in the US being cheaper for the same kind of business, that has always been there. Unfortunately or fortunately, Asian Paints is ATP and makes paints, and most expensive paint company in the world. Nobody knows why. It's not like it's rocket science to make paints, but uh, and why you pay 80 PE for that? Why would you pay 80 PE or 100 PE for a Unilever when the parent is available at far lower PEs?
No, no.
Uh,
So these are all abnormalities which
yeah.
will correct over a period of time.
No, I think Unilever has never corrected, sir. 20 years, they have always been higher PE than.
दीपक भाई दीपक
Hmm.
भाई देर है अंधेर नहीं है.
Yeah, but on a long enough timeline, though.
No, if you go to see, there is a paint company in US
Huh.
uh, starting with S, some Williams, some I forget the name. The symbol is SHW. Okay,
I see. I see.
Sherwin Williams. Sherwin
Sherwin.
Williams.
Yes, yes, yes. They're the
It
biggest, I think.
is 7 times bigger than Asian Paint.
Yeah, yeah, massive, yes.
Massive. Asian Paint market cap is just about uh, half of Sherwin Williams.
Uh,
So eventually, Deepak bhai, things will fan out over here, and you will see much lower. And see, a lot of people are entering paint industry.
correct.
JSW, MRF, EAO. So there will be competition. And see, Hindustan Lever is not doing anything except it's being held. Okay, it's held by the parent.
Correct.
The price is held by the parent indirectly because of the added benefit it has in its parent's balance sheet or parent. So don't you buy lever at say 2200. How much you will make in 3 years, 4 years, 5 years? Nothing. You will have a trophy in your house called Hindustan Lever, but it will be of no use to you. You
Yeah.
buy Asian Paint, you can in the club you can say I have Asian Paint, hey, blah blah blah, but it will not take you anywhere. If you see it touch some high of 37 or whatever, it's languishing at 3,000. Next month it will be 2,900. Slowly, slowly it will drift down. Lot of new buggers will buy. So I don't see any point in buying high priced trophies. And as far as Nifty is concerned, please, please, I have seen many markets right from 1976. Bear markets are stealth. Initially, you don't realize you are in a bear market. But when it strikes, oh
No,
my
I
God.
agree. I think we are in a bear.
So some of my friends are unable to believe that it is a bear market, and they think it's a starting of a new bull market, are sadly mistaken. Reliance is, see, Reliance, if it breaks
Everybody
2,400
thinks, the
tomorrow,
feeling is that, okay, there is this thing, and then uh, after 4 or 5% of an up move, I think after that first three big selling days in 2008, the market fell 25 or 28% in some 3 4 days. The next 3 days, the market recovered nearly 10%, I think. So they're very fierce rallies. So, but one should be careful because I think at this point we're going to have to expect some kind of a rally like this, which, like you said, it sounds like a pullback rally. And, okay, we're back from the lows and all that, but these are a lot of them are head fakes and just precede the next series of falls or stuff like that. So
no, Deepak, I have a different theory. In the month of July, August, September last year, the Nifty went up 1,000 points each year or each month. Okay. Now, this April expiry was 17,200, and we are already at 15,800. So 1,400 points gone in this expiry up till now. So I foresee another 600, 700 points easily because the Bulls have lost it. The Bulls have lost the game. Now the bear has to only press the button. So we'll see a major, major damage to Nifty in this
do
month only.
do you see any impact of the SEBI regulatory change also that is hitting the markets?
Yes,
Like,
yes, lots, lots, lots.
okay, that might be another interesting play because just as regulation bumps it up, because I remember in 2006 there was a 30% crash right after the Reliance Petroleum IPO. What was also not discovered at that time, after 4 or 5 years, FNO had only started in 2004 for stocks, but I think the SEBI had bumped up the margins quite significantly for FNO trading, and that also caused a lot of damage when the liquidity went out. So it caused a lack of liquidity also. So maybe the SEBI regulation on margins and the fact that, of course, they're not charging penalties right now, that they will charge penalties from July onwards. A lot of brokers have started to change their activity to get full 50% cash from all traders, which I think hurts the bulls more than the bears. Typically, I suppose, and I think Sharad Bhai, you only told me this, that the bears are usually a lot more. The bear people who are bearish and who are willing to act on their this thing are typically a lot more well capitalized than the bulls.
Yes, all bears are mostly well capitalized, over capitalized, I would like to say.
Yeah, I mean, uh,
They
interesting.
don't use much of leverage as such.
uh, Interesting. Tussle the battles, quite
Yeah, it's interesting. But I'm sure, very, very, very sure, the Bulls are in for a big time spanking. Um, May series 1,400 points gone.
yeah.
Today the recovery was very wobbly. Nothing happened. So I think we'll get a good spanking. I don't want to say, but we might see much lower levels here.
Well, good.
See, one thing in mind, keep one thing in mind. Beyond June or July, beyond June or July, we will not have a bear market because bear markets are fast and furious. They come fast, they go fast. So I don't foresee that beyond July we'll have a bear market as such. So for that to happen, we should see much lower levels in a short span of time. And thereafter, we might see a gradual recovery. But believe me, if the results are so pathetic, how the recovery will come? I
But
don't know.
recoveries always come on bad results. No, I mean, not these results, but I'm saying even in 2000, I remember 2013 when the economy was in the doldrums, I was also thinking, ki, why will the economy recover? Why is it moving up? Even after Lehman, I remember in 2009, March, April, May, stock markets went up like crazy. Then, of course, there was a
No,
election.
no, 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 no. That time, our Indian economy was not much affected. There
No,
was
but
a,
March
a
results were very bad.
yeah, okay.
March
I don't
2009
know.
I remember because I was looking at the result and saying ये क्या तो head fake है, and then it went and shot up and then upper circuit and God knows what, so of course upper circuit from those levels doesn't sound like a much thing now, 3,500 and 3,600 levels है upper circuit, but still
नहीं उतना नहीं आएगा अभी उतना नहीं आएगा
वो ठीक है, hopefully I think you're right. I mean, I hope you're right because I think to me that's bullish. If the market bottoms out in 3 months, it's probably a good thing
no
because
I'm very sure it will bottom out in June or July.
well, that's good, yeah. Because if we have many more Julys to see, then this is opportunities coming our way, I guess. But yeah, I mean, I think your answer is yes, sell in May and come back in July.
Yes.
That's it's a good counter. Yeah, I personally feel there is there. I mean, today is one of those times when I can actually say a positive surprise might, like a Putin or a inflation change, might change the course of the market simply because there is so much bearishness built into the estimates that everything is going to be much worse. It might actually be, I think the default course is inflation will first get worse and then get better. But let's see. I mean, the idea here is, of course, India is also now at 20 times earnings. Of course, many of those earnings are steel and all that, which are very temporary in nature. But it could be that market's not as expensive at some level as we speak, but I'm still basing it on the last 10 years. And the last 10 years are not usually a good criteria to base your fundamental estimates on because money was very cheap. Money suddenly became expensive. So that was quite interesting. Okay. It's been an hour, so I think we'll call it a day or a night. Thanks, Sharad Bhai. Thanks, Neil Bhai. Has been a fabulous thing. Thanks to all the speakers as well. I hope you all enjoyed this.